Vantage Point with True North Wealth Partners is for our clients and those wanting to learn more about what's really going on within the markets and economy, as well as overall financial planning topics.
Welcome, everybody. Welcome to Vantage Point with True North Wealth Partners. Today is Wednesday, July 22nd, and this is episode number 52. So appreciate you tuning in. This is going to be a packed, full, informative, informational 15, 20-minute podcast. So look forward to educating you on what's been going on in the markets. There's a lot of important things and more than usual tips of the month this time around. So with that, let me jump right into disclaimers I need to read off. So this is just, as you know, if I hold up pieces of paper or anything like that, information has been obtained from a third-party source, which are believed to be accurate, but cannot be guaranteed its accuracy or completeness. And then for asset classes, products, diversification, anything, following information is not intended to be specific investment advice. It's important to consult your financial advisor who understands your individual financial situation prior to making any investment decisions. And if I talk about myself, since I'm on the podcast here today, it's my beliefs. It's me. It doesn't represent anybody here at True North Wealth Partners or Stratus or SEI or any other partners that are out there. So it's our opinion, we believe, et cetera. So I just want to get that out there. Andy is in Mount Vernon. He's at a client appointment here this afternoon. Eric Biddle is actually with a client, a lady client right now in his office. So flying solo, as you can see. They all say hi. Russ is up north in Worcester doing a lot of his estate planning, and he's been helping us a lot. So he's been really busy. A lot of our clients have utilized his services. So don't forget about Russ and what he can do as well as far as the team. So I do want to start off first off with some unfortunate news. We have many of our clients and partners, we're a one-stop shop, try to be in-house, tax planning, estate planning. We have all that built here under the True North Wealth Partners umbrella. And Ken Roslett. So we've known him for over 10 plus years. Unfortunately, he passed away earlier in July this month. So it was unexpected. Complications to a surgery that he had. It came through okay, but then doing physical therapy, he had an ailment that succumbed. So it was a great ceremony, celebration of life at St. Peter's Catholic Church, and then went to the funeral home there, Josephinian. It was a nice mass, but he'll be missed. He was a true gentleman. And Robin Harriman, who's also in our office, who does taxes, she's been with him for over 25 years, each of them had their own tax planning. But they both share offices here within True North Wealth Partners. She will be reaching out to you for Ken's clients. Those of you who are watching her Ken's clients, she'll reach out to you here over the next few weeks to give you next steps and direction, et cetera. You can, I'm going to hold this up. Ken, our producer, he'll blow into this. You can see it. You can reach out to her or just call us here at the office if you have any further questions. But like I said, you can email Robin at this Robin@harrimantax.com if you wish. But you will be getting, and Robin will be getting in contact with you shortly. So rest in peace, my man Ken. It's not, the office is not the same without you here, that's for sure. But did want to make mention of that. So with that, let's sort of get into, again, markets overall. So markets will still be volatile, both up and down, okay? So we have now transitioned coming out of a quad 4 month of July. That's what we were heading into a quad 3. So with that said, if you remember the quads, okay, quads 1, 2, 3, 4, spring is quad 1, spring, summer, fall, winter. So quad 1, 2, 3, 4, spring, summer, fall, winter. So it just talks about the ramifications of where are we. So quad 4, growth was slowing, inflation was going down. So that's what we were in. For month of August, that's upcoming. Growth is still slowing, and inflation is going to go back up a tick as well. So that's quad 3. This means stagflation. That's just the overall quadrant for what's going on. So in the monthlies, these are the monthlies. Again, Nathan will push into this and blow this up for you as well. And as you look at these charts, you can hit the pause button too, folks, as you watch the video podcast if you want to stop and zero in on this a little bit longer. But you'll see here the quad 4 for the month of July, 76% probability. July is a quad 4 month. Okay, yes. That's basically the markets move 3 or so weeks ahead, so they front run. That's what Hedgeye. This is all from Hedgeye. I've been using them for over 10 plus years. Scott Bessent, Treasury Secretary, has been using them for longer than me. Kevin Warsh, the new Fed, uses Hedgeye as well. So the Trump administration, their whole cabinet, they get the CPI nowcast, they get the GDP nowcast, which is awesome. That's why Kevin Warsh said during his confirmation hearing over a month ago that they're going to have a consultation, look at all 5 different groups looking at different things, how they're going to revamp the Fed, because they're going to bring in some new stuff, which is utilizing Hedgeye's resources. So the Fed will be more accurate, more on the ball, not as far as looking backwards 6 months. They're going to be forward guidance, forward looking, things of that nature. So using nowcasts and predict much better information. So we're all excited about that. So quad 4 month now, next month, August, the percentage, a little more than 30% now is going to be a quad 3. And then you can see quad 1, 2, 1, 2, 2. Next quad 4 is not until February next year and then May of next year. Next year could be more bumpier than this year, and I anticipate that. And really comes down to November elections as well. So we'll see how all that goes. But just want to give you an update on sort of the markets, the quads, where we're at. The Fed, the monthly nowcast, again, this is produced. This is hot off the press from today. This is dated 7/22, so July 22nd. If you saw here, the high point was 4.25% for the May. Let's take a step back. Let's go to February. February was a low point, or near the low point, 2.41. Then it did go higher. That's because of the war in Iran. So it shot up there March, April, May, 3 months straight up. 326, 381, 425 is what the inflation print was. And then it came down, and Hedgeye was spot on with that, the trajectory, and then the markets weren't expecting such a big decline in 3.53. And then, what's interesting though, the latest 3.42. So the nowcast projection for today that will be delivered on August 12th is now 3.42. It's been updated twice already. It was 3.34. 3.37 went a little bit higher. Now it's 3.42 is the new nowcast CPI print that should be delivered on August 12th. This gets updated daily. It can be updated daily as information comes in daily, but that's the latest as of today. I can see it, oil prices going higher. So therefore I can see it going a little bit higher as well. Might even go, when it's all said and done, it could be north of 3.53. It could be, 3.6. But the point is, Hedgeye believes at this stage in the game that the high watermark for this year of the inflation of 4.25 has come and gone. So that's the latest on the CPI nowcast, of which, like I said, the people in the administration now get all this, which is all good news. All right. So there's a lot going on there. As far as the markets, you see things move. It's all momentum, a lot of momentum trading and things of that nature. They unwind, the SpaceX, the glory days, and, went up to over 200, came down to 130, and, it is what it is. So that's why there's just momentum trades. So, we're not day traders. We're not just a weekly trade in and out type of thing. So we're more long-term, as you all know. You've been with us for many years. So that's why you have to be totally diversified. And with that, expect more volatility, no recession this year, just more market volatility. Like I mentioned, possibility of recession risk going higher in 2027. Fed rates, remember there was at the beginning of the year, I mentioned on the podcast, I don't see a Fed rate hike at all. I said possibly a rate cut by the end of the year. So I'm still going to hold on to that. Might be a little harder now, but we'll see with all that's been going on. So if there's no... Right now, the Fed's on hold, and they're going to be on hold for a while. So that's what the latest readings indicators I'm getting, which is great. So that's fine. As long as they don't raise interest rates into a slowing economy, that's not good. So, and these guys who are driving the bus now are fully aware. So on hold for now. Maybe a rate cut by the end of the year. If not, it'll be sometime the first half of next year. And that's where we state on what we see in regards to the Fed and the rates. Thank God that they're going to do it. The dot plot is useless. So none of that meant anything. So I'm glad Kevin Warsh is not buying into that dot plot game anymore, which is BS. All right. So with that, I am going to just turn to, I have a lot of tips of the month. So I'm going to jump into that segment now. So tips of the month, I'm going to start off with a PSA, public service announcement here. So with this, AI has drained a lot of the energy. So if you remember, I talked about this years ago on the data centers and how they're booming. Years ago, Columbus was ranked 50th. And then in my last podcast, we mentioned how we're ranked top 5 now on data centers. And again, can be handled by small modular reactors, things of that nature. But with that, if you remember, I talked about the energy choice, okay? 3 years ago, I was on the podcast. I mentioned this as a public service announcement then, and Nathan even remembered I was talking about this. So please go online, folks, so to look at your electric or gas. So I did this 3 years ago. I locked in my electric kilowatts per hour. It was at 0.0649. Okay, I locked that in for 3 years. It's changing here in August. Okay, I got a sticker shock, 52% increase in my electric bill. So I said, oh no. So I called, went online, looked around, got them down. So anyways, I found a rate. So I'm going from 0.0649 to kilowatts per hour to 0.849. So that's basically a 30% increase. It's the lowest I can find. So I'm going to suck up and take it on the chin, a 30% rate increase in my electric bill for the next 3 years. I locked it in for at least 3 years. So again, go to Ohio Energy Choice, ohio.com there. And that's, just so you can see, just Google that. It's the apples to apples electric. You can see that. It's on the ohio.gov site. So please take advantage of that. Just, what they give you, don't take that. Do your own homework, shop around, and call. Next, I want to talk about the population growth for Ohio. Okay, so this is all nationwide, all the different states and et cetera. So the number one was Nevada. So Nevada grew from 1970 to 2025. So over those years, 1970 through 2025, the population grew 572%, 572 in Nevada. Basically, tourism to a broader metro economy. So it's just shifted. DC lost the most, like Maryland, Virginia, and all that as well. So that's that. Ohio came in at only 12%. So we grew our population only 12%. So nothing great. But to put this in perspective, back in 1970, the population for Ohio was 10,657,423. 10,657,423. Population 2025 is now 11,900,510. 11,900,510. That's basically 1.243087. So 1.2 million increase in population over that time period, which is it's not a lot. But I will say this: you guys know I'm very proud of being a Columbus resident. An Ohio resident in particularly, but Columbus is now number one in the state of Ohio. So we've, as far as the largest city, we passed Cleveland, Cincinnati over the years. So that's that. Just wanted to throw that little food fact out. That came from Veroni, Visual Capitalist charts. In addition, sticking with the Ohio banter. So Ohio is ranked number one for business acumen for 2026. So last year, Ohio was ranked 5th. So we were 5th in the overall rankings. This is all done by CNBC, their business publication. This got released published on July 9th. So July 9th is when this came out. So last year we were ranked number 5th. This year we're ranked number 1. And then over the years, in North Carolina last year was ranked number 1. So Ohio was ranked 1 this year. 2nd place, North Carolina. 3rd place, Virginia. 4th place, Texas. 5th place, Minnesota, et cetera. So this is for business acumen. So multiple things that go into it as well. So I just want to make reference to that. That all came from CNBC and their power study. So I used to say the Ohio was the hidden gem. I said that for decades. We're no longer. There's Ohio's out. It's everyone's here. So that's that. So next on the tips of the month, I want to talk briefly about the tax holiday coming up. So folks, don't forget. Basically, we have the Friday, August 7th through Sunday, August 9th is the tax holiday. It's no sales tax on school supplies, things of that nature, clothes, things of that. So just be aware of that. Put that on your calendar so you go shopping, back to school, what have you. Friday, August 7th through Sunday, August 9th. So that came from the Ohio 529. Speaking of the Ohio 529, my daughter Ella, the oldest one, she's off to college next month in Miami of Ohio. Oh my Lord, just stroked out that check. Came out from my 529 account that we started over 20 years ago. Yes, we started the 529 accounts 2 years before we had any kids. But the point is, thank God I did, because we need every freaking penny. It's incredible. So the check got sent out, going to Miami. It's en route in the mail to them now as we speak. So that happened this week. First of many. And then my youngest one she's only going to be an 8th grader at St. Bridget. She's doing volleyball, doing well, having classes at camps at Waterson's thing, and it's all good. All right, last, I just want to talk about the Trump accounts. So the Trump accounts and this chart here, and again, reach out to us if you want any of these charts. We can email them to you, what have you, but they will be on the podcast. Nathan will blow this up as well. This is a great summary. This came from Capital Group. We utilize, they're one of our vendors that we use for funds and ETFs, et cetera. And, the upshot's this. I'm going to focus on, there's a Trump account, the custodial, the UGMA, UTMA, and the 529 accounts. 529 accounts are great. HSA accounts are great. But this Trump account, it's phenomenal. What I like about it, and my oldest was upset, Ella, because she's 18 and she doesn't qualify for it. So she didn't get hers. But my youngest, Sophia, did get it. So we signed that up right after July 4th is when it became active. So you can go on the website, trumpaccounts.gov. And it took probably 15 minutes. There's some checks and balances. It's all online. You download the app, goes on your phone. You fund it, connect up a bank account. You can put up to $5,000 per year into the account. So we just funded it, and it got invested into an SPYM. So it's a market cap weighted S&P 500 index. So it's a low cost index. It's the lowest one out there right now. And there'll be other funds added to the list later on. But for now, that's the default. And it's great. So you can put money into a child's account no matter without having to have earned income. So it's an IRA type of a retirement account that you can start at age 0. So babies, so newborns from January 1st, 2025 through 12/31/2028. So during the 4-year term there, Trump's presidency, any child born during that time, you can get up to $1,000 free. So you just sign up on the account. They'll verify. You have to have a Social Security number. Only U.S. citizens only, obviously, and then it will get deposited into the account. And then there's other Michael Dell's doing $250 Spectrum. Other companies are putting money in, matching money. Employer can put money in. It's great. So I've been saying this for decades. When a child is born, all you need is a Social Security number and a retirement account, and that can go and follow you anywhere. So this is finally something's being done about this. I love it. And the amount of money time value of money is all it comes down to. Instead of starting at age 18 or 20 and putting money away, you can start at age 0 when you're newborn. So it's phenomenal. And that extra 18 years of growth or what have you, that's how you can get 2 million, 3 million instead of just $1.5 million or what have you. So compounding time value of money. So just check it out. I'm going to leave it at that for now, but just refer to that or reach out to us. So those are great tips of the month. I just want to cover and things that we have done. Hopefully you utilize some of these, and we'll go from there. With the elections coming up, just vote wisely. Socialism and communism is knocking on the door, especially those in Franklin County. So there was a Business First article talking about that, how free tuition at Columbus State, who's going to pay for it? It's a $1.5 million tax levy on homeowners and even those who rent in Franklin County. Watch out, because the property owner is going to pass that on to you. So just choose wisely when you do vote. The DSA, Democrat Socialist / Communist of America, has taken over, unfortunately, the Democratic Party. So it's gone too far left and not good for true Americans. I'll leave it at that. With that said, let's get charts, a lot of good charts. So with that, Nathan, he'll just blow these up. I'm going to bust through them here. The VIX Volatility Index, here we go. Volatility Index right now averages 18.4. Right now it's 17.1. So it's below the average since 2010. And this is at latest updates July 21st. All this comes from Clearonomics. They do a great job on getting us these charts. And also, folks, to go to our website, because they have all the podcasts are there, and there'll be the charts. Go to the charts tab. You have 20 charts that are updated daily. So you can go to our website, click on the charts, and there's 20 charts which are there, which get updated daily. So you don't have to wait for these podcasts. You can just go to the website and check it out. A lot of great information is on our website, by the way, and hit that subscribe button too. So with that, annual returns, pullbacks. Okay, so far markets are up around 10% in the S&P. Markets are down. It's really 9.8 on the S&P. Almost 10%. Here it says 9, but that's the swing. So you can see the red dots, max drawdowns. Pretty much every year has a drawdown, but every year it has an uptick as well. So you can just see where it closes is the key. So annual volatility intra-year volatility is going to occur. Pullbacks, like I mentioned, 5% pullbacks. That occurs on average 4.6 times per year. Technically, we've only had one 5% pullback. We almost had that 10%. It was 9.8 back on March 30th there for the S&P at the low point. So almost a 10% pullback, but we didn't hit that officially just yet. So with that being said, again, pullbacks are common in the S&P. Stock market valuation, the S&P, you can sort of see today is the little diamond in the dark blue. Versus a year ago is the red X. So still some things are still elevated. You can see the price of earning, price to book, price of sales. These are just metrics, the things that go on valuations. So there are 1 or 2 standard deviations higher. So things are somewhat elevated, but it is ebbs and flows. S&P earnings growth rate. This is key. It's all about earnings. So the S&P, you can see, is 22.6. It was closer to 24. And it's come back down some. So in the earnings growth rate, okay, the historical average is 7.8, and currently it's 22.6. And that's why the stock market's been doing very well, because earnings keep on growing. So, hopefully they can continue to grow, but I do see a slowdown in earnings at some point. No recession yet, like I mentioned, just ebb and flow. 2-year, 10-year interest rates since 2010. So the 10-year, you can see average is 2.7 is a 10-year for the yield. And right now it's 4.63 as of yesterday's close, 7/21, the market update. So 4.63 is a 10-year. The 2-year is 4.26. You can see the spike over here over the past few months. A lot of it has to do with the war, et cetera. So you can see visually, you can see how things have really taken off with the COVID. Came down and came back up. The M2 money supply, the printing press, POW, the throwing money out, the helicopter money, and that's what really created the inflation. And since 22, it's gone sideways for the most part. It started coming down and then went back up slightly here of lately. But hopefully we get that down somewhat over the next 6 months. CPI, Consumer Price Index, we talked about the inflation. So again, core is what the Fed, and they focus on core a lot. It excludes food and energy. But folks, I just talk about CPI in general, the headline number, because that's what hurts us in the top pocketbooks, gasoline prices, costs at the grocery store. So inflation was coming back down, like I showed before in the other chart, popped back up, and then it's come back down. Most recently at 3.5 as a CPI for the CPI inflation rate. PCE, the Fed, their mandate, okay, they look at the core, which excludes food and energy. Their mandate's 2%. Right now it's 3.4. So again, still far away, and you can just sort of see how that is as well. Kevin Warsh has he has a lot to go through and handle over the next years in his term. The oil and the dollar. So the oil price you can see was higher, came back down. And that's on the left axis there, WTI oil prices. So right now it's 84.91. This is through July 21st price. So it came down, the war spiked it back up, and it came down sharply. That's why you had a low CPI print last month. Now it came back this past week, basically, because of the reissuance of the war. What I'm hearing in the grapevine is going to be a little action coming, even more so. So it's going to get interesting here for the next few weeks. And then through all the calls and stuff that I'm on, by the way. So the dollar, you can see the dollar sort of stable. I mean, it's been elevated. It came down somewhat, but, in that, 101.17 is the latest price. That's on the right axis is the U.S. dollar. Personal savings rate, unfortunately, the historical average is 6.2% as a savings rate. It got flooded by the all the money, the government just threw in your savings accounts and went up to 31.8%. And now it's down to near the low at 3%, it's a savings rate. So it's well below the average. And people, that's why that K-shaped economy you hear about, it's not easy out there. So, and the stock market highs, want to end on this. So the S&P 500 all-time highs, right now it's 24 times this year. We've hit all-time highs. Last year was 39. The year before that was 57. And ebb and flows. So, that's the S&P 500 and where we're at. So that's the latest. Again, please reach out to us. We do appreciate you. Hopefully your summer is going well. And again, in-person reviews, webinar reviews, phone call reviews, email reviews, what have you. Just reach out to us, our advisors here. We're here for you. We have the True North Insurance Partners Division as well. Eric Biddle handles that and runs that. So we are your one-stop shop for all your investment, your financial planning needs. We're here, your financial coaches. Lean on us. We have a lot of years and experience, and it's not our first rodeos. And obviously, we have a passion and love of what we do. So enjoy the remainder of your summer. We'll talk again, and thank you.
You can reach this episode on our website at mytruenorthwp.com, by other podcast venue sites, or by calling us at 614-929-2715. Also, feel free to share this episode with friends and family and sign up for our weekly email market updates via our website. Investment advice offered through Stratus Wealth Advisors, LLC, a registered investment advisor. Stratus Wealth Advisors, LLC, and True North Wealth Partners are separate entities. Opinions expressed in this podcast are for general information only and are not intended to be specific investment advice. It is important to consult a financial advisor who understands your individual financial situation prior to making any investment decisions. Some of the information contained herein has been obtained from third-party sources which are believed to be accurate, but we cannot guarantee its accuracy or completeness. The information should not be regarded as a complete analysis of the subjects discussed.